session, we'll discuss the future of Indian markets, explore emerging trends, challenges, and opportunities that will shape the trajectory for business and investors alike. Our panelists for this session are Navneet Munot, MD and CEO, HDFC Asset Management, Chairman, AMFI, Sunil Singhania, Founder, Abakkus Asset Manager, Swarup Anand Mohanty, VC and CEO, Mirae Asset Investment Managers, India. And the moderator for this particular session is already on stage with me, Shailendra Bhatnagar. Shail, we look forward to this. A huge round of applause, please.
Good evening, ladies and gentlemen. I'll again request you to take out your pens and notebooks, and if you are very familiar with smartphones, then please the notepad. And the reason is very simple. I'll start with the youngest and the nimblest. Mr. Singhania, at 23,000 crore rupees, manages two of the best mid-cap and growth funds. He was just telling me, एक fund 4 साल में 4 गुना हो गया, एक fund 3 साल में 5 गुना हो गया. To his left is a gentleman who runs Mirae. He's had a very hearty meal. He's just digested Sher Khan. And at 1.4 lakh crores in terms of funds, most of them in equity, his voice matters. To my most immediate left is probably the biggest AUM that we've seen so far, 5.4 lakh crores, and a very well-known name in the world of funds that have given phenomenal returns over the last 30 years. Navneet. Thank you. Chali. Let's begin the discussion, and you know, the discussion around this table was kiski sip book sabse badi hai. So let's start with the biggest man on the panel. So what is your sip book these days?
So I'll talk about the industry ka SIP book, which is 17,000 crores. And to put that number in perspective, 3 years back, it was half of what it is today. It took us like almost 25 years for the industry to reach $1 billion a month. And in next 3 years, we have doubled it. Actually, if we go back in 2017, that was 4,000 crores. So wow. 4,000 crores in 2017, 8,000 crores in 2020, and we are at 17,000 crores in 2023. And in our entire career, Sunil and Swarup, in our entire career, we were always told, rather we learned it the hard way, that if global economy sneezes, India gets a fever, or if US markets sneeze, then Indian markets will get a fever. This time, there are large parts of the world which have got fever. Touch wood, we are yet to sneeze as an economy, as markets. And I think that's the power of the domestic investors. I think it's the collective work of the entire industry. There are 3 or 4 major factors, I would say, are responsible for taking this number to where it has reached. But of course, we have a long way to go. I think one is the track record. You talked about like funds delivering the returns that they have delivered. I have the honor of being part of, privilege of being part of a fund house where we have track record going back 29 years. Our Balance Advantage fund will complete 30 years in another 2 months' time, or a Flexi Cap fund which is around for 28 years. And funds have delivered like 18, 19, 20% CAGR for 25, 30 years. Somebody who did an SIP of 10,000 rupees per month in HDFC Flexi Cap fund, the amount today is almost 15 crore rupees. Now, of course, that was a different environment in terms of inflation, in terms of interest rates. I'm not saying that next 28 years a similar story is going to repeat, but it just shows the power of compounding. It just shows the potential that India has got, and we believe that now more and more people are looking at that track record. The second is the transparency. The Indian mutual funds are one of the most transparent financial products or investment products, not only in India, but even relative to any other part of the world. The third is the technology, which has made it easier and easier for investors to understand this product, invest, transact. so on and so forth. And last but not the least is the training or the investor education. The campaign by AMFI of mutual fund Sahi Hai, and the individual effort by all of us to spread that word in every nook and corner of the country. I think some of these things have played a big role. But all said and done, while we can pat our back for reaching 17,000 crores SIP, we can pat our back for reaching an AUM of close to 50 lakh crore rupees. The fact is there are only little over 4 crore unique investors at a PAN level who have invested in mutual funds. So we have our work cut out for next several years.
Okay. So the growth path is not only long, but it's also aspiring to look upwards. My question to you, Sunilji, is fairly simple. We are looking at maybe the next 5 years in which this kind of an environment will only get better. How do you navigate the markets from now on? What are you personally thinking and looking into over the next 60 months when it comes to equities?
Thank you. So, when the going is good, we all believe it is going to continue, and I'm very sure it will continue. But at the same time, I think we have to be also cognizant of what we are in and where we are heading. So first, a disclaimer, I have always been positive all my 25, 30 years of managing money, so please take my view with a pinch of salt. But having said that, I think, things have worked out pretty well for the Indian economy. In a period like 2022 and 2023, when the world was debating whether there will be a recession or 0% growth, in India we were debating whether we'll have a 6% growth or a 7% growth, and we ended up growing at 7.6%. Corporate profits June, September have been year on year up by like 30-35%. Even for the next 2-3 years, earnings growth is looking like 16-17%. I think political concerns are receding to some extent. And in India, inflation and interest rate actually is not a worry. So in India, interest rates have moved up from 6.25% to 7.25%, which is 15% increase. Vis-a-vis US, where they moved up from 1% to 5%, which is like a 400% increase. So I think in India, things are pretty sorted. There were headwinds on the global side. One was obviously outlook on oil prices. Second was macroeconomy, particularly US. And third was the geopolitical issues. I think oil has already come down from $95 odd when the West Asia conflict between Israel and Hamas started to less than like $70 to $73. We have been very clear since the last 1 year that medium to long-term outlook on oil is very, very weak. On one hand, you have increased production in US. So US is expected to produce like 15 million barrels a day, which used to be like 7-8 million barrels only 3, 4, 5 years back. Secondly, you have renewables like solar and all, which have become very, very attractive, even without subsidies. Third, you have the EVs, and then you have billions and billions of dollars being spent on innovation, particularly on the hydrogen and non-fossil fuel-based energy sources. And I think this can be the biggest positive for India for a long, long time. In fact, India is slated to be the largest exporter of hydrogen in the world when this starts. On the macroeconomic front, US had issues. In October, if you remember, markets corrected. And all of us were shouting that abhi to gaya hai, mid cap, small cap is over, this, that. 5% correction, and it looked like as if there was a Lehman too. That is how we have all started to behave. But since then, inflation is clearly trending down, and it will trend down because metal prices are down, agri prices are down, energy prices are down, and real estate prices are also down. In fact, there are reports which say that if you remove the real estate, US inflation is already down below 2%. And I think that has led to the view that now there will be an interest rate cut in the US rather than an increase. And hopefully with a lag, I think first 6 months is going to be bad in terms of reported GDP numbers in US, but then it should stabilize. The last issue has been the geopolitical concerns in the world. You had Russia, Ukraine, potential China, Taiwan, and now the Israel-Hamas issue. It's sad that so many innocent lives are being lost. But hopefully, it will contain. The only good thing is that they have been localized issues. But, we have to be aware of that. So I think we have a great India macro, micro. You have an improving global scenario. Fund flows in India are phenomenal. So even without foreigners coming in, with foreigners selling, we have this kind of a market.
Exactly.
Now imagine from a foreign investor's perspective, वो कहाँ पैसा डालेगा boss? China में डालेगा नहीं, because China has become the villain of the world. In fact, they are removing money from China. Russia में तो they lost 100%. Europe is almost certainly going into recession. Where is the growth left? And it is not that in India we are very expensive. I think on an FY26 basis, which is what people have started to discount, we are roughly around 17 times. So we are not
cheap, Nifty PE, right?
We are not expensive. So I think if your return expectation is 12-15%, there is absolutely no problem. But if you are expecting 50% every year, you will be very, very disappointed.
Okay. So continuing with you, Sunilji, the person on your right and the person on your left is hamstrung by rules which govern where money can go in terms of large caps, mid caps and small caps. You are the only one who has a lot of freedom. So the fresh inflows that are coming into Abakkus, as a holistic picture, where is the maximum deployment coming in?
I think you are not right. I think both of them have 20, 30, 40, I don't know how many schemes which cater to micro cap, to the super cap, and to hybrids and XYZ and multiple things. We keep it simple. But having said that, I think there is opportunity everywhere. And we get into a lot of discussion, ke large cap le, mid cap le, small cap le. I think there is opportunity everywhere. We have great mega caps, we have great large caps, some of the best known brands in the world, some of the best known companies, managed companies in the world, which even at that size are growing at like 15%. I don't think in the world you will find too many places where large and mega caps can grow at 12-15%. And then obviously, India is a country of entrepreneurs. We have multiple thousands and thousands of entrepreneurs and budding entrepreneurs. We have almost 1,500 companies which are worth investing. And every day you have so many issues coming in. A lot of them are great companies. I think the only thing, at least at Abakkus, we look at is fundamentals.
Okay.
And I think in this kind of a market, it is very easy to get carried away. There is complete FOMO. There is euphoria in multiple things, anything to do with railway, anything to do with defense, EMS, IPOs, penny stocks, turnaround stories. I think there is a lot of FOMO. So I think the only thing we bother about is whether what we are buying has fundamental basis or not. And irrespective of whether it is large cap, mid cap or small cap, there is return to be made. I always say this, that, markets are like cardiogram. They will always go up and down. As long as they're up and down, we are alive. So large caps, the ups and downs are smaller. The slope up is slightly more stable. Mid caps, the ups and downs are larger. The slope is steeper. And the small cap, the ups and downs are larger. And the slope is also more steeper. So if you have the heart to digest more ups and downs, you have to be in small cap. If you don't have the heart, then you will make returns even in the large caps.
Okay. Let's get Mr. Mohanty into this discussion. Sir, as we all know, the flavor of the market is mid caps and small caps, and many theories are there in the market कि 40% index बढ़ गया कोई बात नहीं, लेकिन अभी भी दम है इसमें. So what is your view? If you look at 3-4 years down the line, do the valuations and the prices that you see in frontline mid caps and small caps, maybe the first 50, are they justified? Are we headed for better days in mid caps and small caps, because that's where the money is coming in?
Shailendra ji, actually problem mera kya hota hai na, when you put me on a dais with Mr. Munot and Mr. Singhania, these are two pedigreed fund managers. I have been a sales guy. I've sold funds, I have not managed funds. So ऐसे ही कभी जब मैं बैठ जाता हूँ तो बहुत स्ट्रेस में आके थोड़ा पढ़ाई कर लेता हूँ. I was on a similar podium few days ago with a very large fund manager of the country. So I did some studies. So I took out one of my older presentations which I was making in 2003. हम बात कर लेते हैं, okay. So 2003 my presentation heading was India Structural Growth Story. 2023 I'm making a presentation India Structural Growth Story. 2033 I will make the same presentation India Structural Growth Story. Because we stay in India, वो हम महसूस नहीं करते how lucky we are. That we are in an economy which is on a 30-40-year-old secular structural growth. Then echo on what Mr. Singhania said. It is not about mid cap, small cap, large cap. Opportunities are everywhere. The objective is to buy a good business at a good price. Yes, when you ask the question of the AUM, last year was a maiden over for us because we don't have a small cap. with markets flow almost 40%. And here's something which I'd like to really discuss, because when you look at the RBI data of 2021, okay, RBI data says 55% of India's financial assets is in banks. Post-demon, 13% of the money is in cash in hand. Post-demon, huh? So 68% of the person's money is in that category. And we have 40% of flows in small caps. Exactly. Is something which people have to reflect on their risk profile. If they're aware of the risk profile, fantastic. Because when we start investing, it is more about return chasing, which we are seeing. But as we graduate as investors, it is about risk mitigation. Last year or the last 2 years data says that people are selling core funds, which is large cap, flexi cap, to buy mid and small. Yes. Here, getting a fund manager is very essential, which they are doing. I mean, which is fantastic to see. But one has to reflect on the risk profile of the. If they are aware of the risk, not an issue. Because like Mr. Singhania said, the ups and downs can be high. It comes with both sides. And equity market is contra every day. Suppose you think the stock price is right and you are buying, somebody is feeling the stock price is wrong and is selling. That is how the deal goes through. Right? So that's how it is. So from a flow perspective, when you look at the next 10, 15 years, I've said this in 2016 in print, redeem India at your own risk.
Kya baat hai?
And I say this today, I will say this in 2033 also.
क्या बात
2002-03 की याद दिला दी ना, तो आपने जैसे अभी इंडस्ट्री को कॉन्ग्रेचुलेट किया कि 50 लाख करोड़ का ईयूएम हो गया. 2002 में पता है ईयूएम कितना था इंडस्ट्री का? 1 लाख करोड़ रुपए का. इट्स 50x फ्रॉम देयर. एंड इंडेक्स था अप्रैल मार्च 2003 में करीब, सेंसेक्स बता रहा हूँ, निफ्टी नहीं, सेंसेक्स वाज अराउंड 3000. And we have come where? And he's absolutely right. 2032, we would be discussing exactly the same. एक काफ़ी वर्षों पहले मैं एक बहुत बड़े लीडरशिप कोच, जिन्होंने शायद विश्व के बड़े से बड़े स्पोर्ट्स सेलिब्रिटी, पॉलिटिकल लीडर्स, बिजनेस लीडर्स को कोच किया होगा. उनका एक बहुत अच्छा सेंटेंस था कि मैं लोगों से पूछता हूँ कि आपकी सक्सेस का राज क्या है, तो कहीं ना कहीं वो इस तरह से बोलते हैं. अल्टीमेटली एक लाइन मेरे को दिखती है कि आई वाज एट द राइट टाइम एट राइट प्लेस. करेक्ट. तो आई थिंक इंडिया में वी आर एट द राइट टाइम एट द राइट प्लेस. एंड बफेट का अभी जैसे बहुत ही सैड डे था, चार्ली मंगर की डेथ हो गई. ही इज लाइक एन इंटेलेक्चुअल guru for several of us from an investing perspective. I think his words of wisdom have been kind of revered by everyone. Unka famous quote hai that, money is not made by buying and selling. It's Absolutely. Made by waiting. That's a lot more important than buying and selling.
What Shailendra ji, just to take on from Navneet sir, is that it depends on bazaar kahin jayega, that doesn't matter. It depends on how you view the market. Are you looking at the market at 70,000 Sensex? Then your view is something. Are you looking at India at 7 trillion? Because 7 trillion जा रहा है.
ये बात तो पक्की है. This is something that I'd like to mention, that for at least a decade, India will be the only $10 trillion economy. हमारे पीछे कोई नहीं है, हमें आगे और काफी बढ़ना है. लेकिन once this economy doubles to 10 trillion, only we will be there. This is something that people perhaps don't look at when they invest into markets. But one of the major north stars is this, that over the next 5, 7, 10 years, the lone player who will be in the $10 trillion space between 10 and 20 trillion, it will only be the Indian economy. Let's get Sunil.
एक बात और ऐड करूं कि जैसे मैंने कहा 3000 सेंसेक्स से 70,000 हो गया, बट एक चीज ध्यान रखनी चाहिए, वो लीनियर ग्रोथ नहीं थी हर साल. वो एफडी की जैसे क्रेडिट नहीं हो रहा था स्टेटमेंट में. इस दरमियान वी सॉ सो मेनी करेक्शंस ऑफ 10%, 20%. 2008 में तो 50% ऑलमोस्ट एनएवी गिरी होगी कुछ महीनों के अंदर एक बार. अभी देखा हमने मार्च 20 में, फरवरी 2020 में 12,000 का निफ्टी था और उसके बाद हमने 7700 देखा अगले कुछ ही हफ्तों में. तो जब हम 2032 की बात करें, स्वरूप करें कि हम यही डिस्कशन करेंगे, इंडिया स्टोरी, इंडिया ग्रोथ एंड ऑल ऑफ दैट. बट ऐसा नहीं है कि यहाँ से लेकर के वहाँ तक हर साल ऐसा 15-18% या 12% कुछ ऐड होता चला जाएगा. That's the nature of the beast, right? It will be volatile for sure, and investors need to keep that in mind.
Right. And I think the Indian investor has also matured over the last 10 odd years, that they look forward to a dip to probably put in an extra SIP or maybe buy frontline blue chips via the ETF. Let's get Sunilji into the conversation. Sir, when you wake up in the morning, reach office, and after the basic study is over and markets are about to open or you're addressing your research team, what are the basic 4 or 5 things you look at on a daily basis which probably not only decide what is to be done in terms of stock picking, but also set the frame for the next 1 or 2 months?
सर डेली बेसिस पे मुझे लगता है सिर्फ चैनल ही देखते हैं कि व्हाट टू बाय एंड व्हाट इज द स्टॉप लॉस एंड व्हाट इज द टारगेट. आई थिंक फ्रॉम आवर पर्सपेक्टिव आवर थॉट इज वेरी क्लियर. Do all your research before you buy, not after you buy. And invest as if you're becoming partner in the business. And if you're becoming a partner in the business, you can't become a partner for 2 days or 5 days. Partner is perpetual till you're convinced about the company. So I think in the morning, obviously, we also have our morning meetings and we also discuss. But unless something is really, really executable instantly, I don't think there is anything which happens. Frankly, the mornings are very, very quiet, which might be surprising. However, see, the world is dynamic. On a daily basis, things are happening, and it is something which is changing in the sense that the world is actually flat. Earlier, what used to happen in the world maybe used to impact India after 10 years, then 5 years, then 5 months, then 5 days. It's now instant. So, if there is something which is very, very dramatic, like, you had the state elections, for example, it happened on a weekend and the market opened with a gap, you don't react on that. Unless, you find that there is over-exuberance which is not justified, or on the other hand, there is something which is an opportunity also. So I think mornings are normally very, very quiet. Our analysts are very focused. And they also understand that we are here to create wealth from a longer term perspective. We are not traders. We don't intend to create income on a day-to-day basis.
So how difficult is it these days to find a good investment option?
So, I go back, I also started my mutual fund journey in 2003. I was in the equity markets before that, but, Navneet mentioned the day I joined, the first day, 10th April 2003, Infosys fell by 40%. There was this company called Mastech which fell by 50%, and the Sensex hit 2600.
Okay.
So my boss said, "Arey kya parnauti hai boss?" So I said, "Boss, iske niche to abhi ja hi nahi sakte hain." So we are starting with a very, very good base. But that time, actually things were easier. I am a balance sheet person. I still read 1,000-1,200 balance sheets a year. That time, no one used to read balance sheets. And that was a big opportunity because there were so many companies which were like so cheap. And the other thing was, mutual fund, no one even used to look at smaller companies.
Ji.
Broker to dur ki baat hai. Mutual funds also used to not look at even smaller companies. And I think we were on the highway of Germany driving at 250 kilometers with no cars inside. And that's why from being the smallest, we were like 100 crores in AUM in 2003, became the largest. We were larger, 50-60% larger than HDFC mutual fund at that point of time, which was the second largest. Now, people have become educated, which is good. People are becoming aware. And there are many more analysts. So there are genuinely a lot of analysts, and then there are lakhs of analysts on Twitter nowadays.
Ji.
So, and ironically, जिसके 100 फॉलोअर भी होते हैं, वो कोई स्टॉक का नाम डाल देता है ट्विटर पे, वो स्टॉक भी 20% बढ़ जाता है आज.
बिल्कुल. Welcome to the bull market.
So it is challenging, but it is also an opportunity because in over exuberance, you get an opportunity to sell. And there will always be something which will happen, like March when the Silicon Valley Bank happened and the Credit Suisse Bank happened, everything was down 30-40%. In October, the index was down 5%. There were so many stocks which were down 20-30%. So I think that is where experience and patience will come into play.
Absolutely.
I think in markets you need only 2 things. Liquidity at the right time and patience always.
Kya baat hai. And let me just assure everybody in the audience, while there might be hundreds and thousands of analysts in India, but there will be only one Sunil Singhania who reads at least 1,000 balance sheets a year. And that is something to be appreciated. Let's get Navneet ji into the conversation. The audience here, of course, is in their young 30s on average, and people who view us are also in that age group. Maybe 4 or 5 things you can suggest from now on till the next 5 years they can do to create wealth easily without staring at the TV screen or the monitor screen, and benefiting from your 30 years in the markets.
So सबसे पहली बात तो अगर आप 30s में हो, अगर आप बोल रहे हो तो why to think about 5 years, like 35 पे क्या करोगे, मतलब पूरा पैसा रिटायर थोड़ी होना है, like
सर
you'll
ये
be
इस तरीके
working
का
a lot.
बाजार है, ये
Sorry?
इस तरीके का बाजार है, ये आपको 5 साल में रिटायर भी करवा सकता है.
But life बहुत long है, and I think when we meet people and say, no, I'm a very long-term investor, so at least minimum like a 1 and 3, 5 year. But 1, 3, 5, I mean, you're going to live for 100. When India got independence, the average life expectancy of an Indian was like 35 years or so. Now it's more than 70. Maybe in our lifetime it will touch 80, 90, 100. You are going to live on your wealth or on your accumulated savings for 30, 40, 50 years. I think the biggest thing we need to do in next 10 years as an industry with the help of people like you is that how do people think like that a long-term meaning I have to save for 20, 30 years and then I have to live on those savings for 40, 50, 60 years.
So what should one do?
And the longevity of life, I think the lifestyle inflation, we are going to have larger income and larger needs. That's very important. Wealth creation का एक ही formula है. Wealth creation का एक ही formula है. And ये मैं नहीं बोल रहा हूँ, मतलब जो स्टडी है सेबी की कि F&O में 90%, 89% to be precise, people lose money. I think I don't know how many, what they would have done in crypto and all the other things. Wealth creation का एक ही formula, and that is just to make it so that people remember that is STP. It's not the systematic transfer plan that we promote in our industry. S is sound investment plus time plus patience. साउंड इन्वेस्टमेंट प्लस टाइम प्लस पेशेंस, इसमें से अगर एक भी चीज निकाल देंगे ना, सही निवेश, समय और संयम, अगर एक भी चीज निकाल देंगे तो वेल्थ क्रिएशन नहीं होएगा. सिर्फ एक ही याद रखना.
चलिए, ये बहुत बढ़िया बात आपने कही. लेट्स गेट मिस्टर मोहंती's व्यू इन. सर, हाउ over the last 5-7 years, one thing that has happened very nicely is that mutual funds have been accepted as vehicles of creating long term wealth. अब आपको किसी को SIP इतना दम लगा के नहीं बेचना पड़ता है जैसे 2017, 2012, 2013 में बेचना पड़ता था. What else has changed in this market which gives you hope for the next 10 years?
See, I think 2-3 things. One, I think the process started with demonetization, when the first awareness that, there should be a shift from fixed assets to financial assets. That got completely changed during COVID. India for COVID now is like a momentous time. For India, check any data point. It is before COVID, after COVID. ये WhatsApp generation में हमारा याददाश्त थोड़ा छोटा हो गया. But before COVID, both the fund managers are there. India had practically slowed down. Banks were, look at the data points that were there before COVID. It was as if, we were talking about Fragile 5 and everything, right?
Yes.
But post-COVID, things have completely changed. But as an individual, when I was put in my house for 2 years, scared for death, lot changed mentally. We have come out very differently, and it's given us a time to restructure our financial statements. And post-COVID, Navneet talked about a data of 4 crore folios. Before COVID, it was 2.3. 1.7 crore folios have come post-COVID. That is the change. Yeah. So first, the shift to financial assets has started. At 4 crores, we are nothing.
Absolutely.
Right? Demat accounts are double us. It should be the other way around. Acceptability has come when the product has got commoditized, and thanks to mutual funds through SIPs, our product is now beginning to get commoditized.
Right.
The problem, there are 2 sides to the story. Please. And think about it when I say this. SIP is a cash flow solution. Mera salary hai, kuch mahina main lagata hu. It is not a process of break down your lump sum to SIP. When I am breaking down my SIP to form SIPs, I am timing the market. And every person in this room will agree that timing the market is futile. In this whole process, we are forgetting the fact that you are in an economy which is going from 4 to 7 trillion. The later you delay your investment, the later your compounding starts. Don't break your compound lump sum to SIPs is my submission.
Right.
जितना लेट आप करोगे उतना आपका नुकसान होगा ये बाजार में. जितना जल्दी आप फंड मैनेजर को दोगे उतना जल्दी वो एक्ट कर सकते हैं. That's the flip side of the story. But investing has started. financial advising has started. I wish a little more asset allocation happens because like Navneet said and Sunilji said, asset allocation only happens on Twitter. In real life, 40% is being bought in small caps. So real life return chasing is happening. थोड़ा कम कर दें, अपने गोल पे ध्यान दें, तो बहुत बेहतरीन एक्सपीरियंस होगा इंडियन इकोनॉमी में.
Right. Sunilji, since you read 1,000 to 1,200 balance sheets a year, draw for us a picture of the balance sheet of India. The audience perhaps wants to know, 5 साल में क्या-क्या macro तब्दीली होगी हमारी balance sheet में, which might impact the markets positively or negatively? Your view.
Sir, see, I think we have all talked about it. Swarup ji mentioned, Navneet also mentioned, from 3.5, we are going to be 7. There's absolutely no doubt of it. But just look at the big picture. 1947, we got our independence. Took us 60 years to reach $1 trillion. Next trillion happened in 8 or 9 years. The third trillion happened in 7 years. After 76, 77 years, we are 3.5 trillion. So that is the wealth which we have created. So in 77 years, we have created $3.5 trillion of wealth. The same wealth is going to be created in the next 7-8 years. तो जिसको लग रहा है ना हम रह गए, हम छूट गए, वो जितना पैसा last 77 years में बना है, उतना अगले 7 years में बनने वाला है. And I think that is the story of India. I think बाकी आप कितना भी है ना उसको 50 पेज के प्रेजेंटेशन में 25 के प्रेजेंटेशन में दे दो. Ultimate story is this. And I think we might get delayed by 1 year. We might prepone it by 1 year depending on the external environment. But बोले ना दिल्ली की तरफ ट्रेन तो निकल गई है.
क्या पहुंचना तो है. दिल्ली से मैं बंबई आया हूं आपसे मिलने. Navneet ji, the last word goes to you. For us in the audience, please paint a picture 5 years from now where markets will be and where do you see the economy?
Discuss kara. Why are we discussing 5 years? We are in the Samrit Kaal. We need to have this faith, unwavering faith. India is creating an economic miracle which is unparalleled in human history. I repeat, India is creating an economic miracle which is unparalleled in human history. Why do I say that? It's not about we going from 3.5 to 5 to 7 to 10 to $20 trillion. It's not about $2,300 per capita becoming 5, 7, 10, 20. The difference between India and most of the other countries which have gone from an emerging economy to a developed economy, they were not as democratic, as inclusive, as sustainable as we are creating. Ours is very different. In last 30 years, our nominal GDP grew at like 10, 11%. Corporate profits grew at 11, 12. Market cap grew by 12, 13. It hasn't happened in many places. China grew much more than us in last 30 years. Their stock market delivered 1% per annum. 1% per annum versus what? Double-digit returns. An economy which can continuously grow at a higher rate, a corporate sector which can convert that growth into profits, and a stock market or a capital market which is so robust and deep, which convert that profit into the profits for the minority shareholder, and a mutual fund industry where even with 500 rupees you can participate in that growth. It hasn't happened in many places apart from, let's say, the sustainable part of the journey or inclusive part of the journey, equitable part of the journey or the democratic part of the journey. We need to have this unwavering faith for next 25 years. And it's a young economy. We have to save for future. Given the starting level of public debt, India won't have the luxury. I mean, we have done a lot on social security, right from your Ujjwala to, let's say, a free toilet to free LED to whatever, variety of things, Sukanya Samriddhi and Ayushman Bharat and all. But I don't think in next 20 years also we'll have a luxury like some of the European countries when they started, they will take care of your retirement. We'll have to save for ourselves, right? 90% people are not in formal employment where money is not going into EPFO. So then it's pertinent that people have that faith and start investing, start early, invest regularly.
Right. With that, ladies and gentlemen, we draw to a close to this wonderful conversation. If you haven't been convinced as yet, then probably these three gentlemen would have by now. Thank you so much for your time.